Hi everyone, this is Roger Nix with the Upstate Home Team here at Keller Williams Realty. And today I want to talk to you about real estate capital gains tax and whether or not you would be subject to those when you sell your home. So taxes are not anybody's favorite topic. Let's just go ahead and put that on the table and be honest about it. So that's the case. However, they are important because you don't want to get caught blindsided, especially with capital gains tax. So what is a capital gains tax on the sale of property? So basically, it's really simple. It is any gain that you've made between the price that you paid for it and the price you sell it for. Now, the government does give us certain exemptions or allowances in that. So if you're single and filing as single and you sell a property, you have a $250,000 sort of allowance there. So as long as you don't make more than $250,000, you don't owe any capital gains tax. Now, if you have a married filing jointly situation, they double that $250,000 to $500,000. So now you have that allowance in there as long as you don't make more than $500,000 on the sale of your home. Now, for most of us, for our primary residence, that's actually going to be, usually in most markets, plenty of variance, right? So we don't have to worry about capital gains, generally speaking. However, there are a few exemptions I want to talk to you about that may cause you to have to pay capital gains, and I want to touch base on those. And before I do, let me point out, I am a real estate professional, not a tax professional. So if you have more questions, if you need deeper detail, either contact your accountant, or if you don't have one, get in touch with us and we'll be glad to put you in touch with one who can help you. So what can cause you to have to pay capital gains? Well, one, if it's not your primary residence and you go to sell it, it's subject to capital gains. It could be a rental property, it could be a vacation property, anything like that. And so therefore you want to own it for at least a year to help minimize your tax. However, any gains you make could be subject to tax depending on your tax filing status and your income level. In addition to that, you may have your primary residence that you're selling, but you haven't owned it and occupied it for at least 2 of the last 5 years. And if that's the case, then again, you could be subject to capital gains. You can deduct expenses and fees off of what you would have gained and therefore minimize the tax. However, just be aware that is another reason why you could have to pay even if it's your primary residence. So there are a number of factors to consider, and if you're thinking about selling your home, definitely you need to contact us so that we can help you determine what today's value might bring for your home and whether or not your home would be subject to any capital gains potential. And if you sold your house last year and you're not sure if you're subject to capital gains because of any profit you made on the home, which a lot of people are making, then by all means reach out to us and let us see what we can do to help you there. If there's a question we can't answer, we'll put you in touch with someone who can. So our contact information can be found below. Reach out to us anytime. We're happy to help, whether it's tax, real estate, or anything at all. We're happy to help you. Thank you so much for watching our video, and have a great day.